kind of the first key piece of the accounting cycle is the scrubber. And the scrubber is responsible for two main things. Probably the primary one that I think of first is it validates your data. And you might think, well, wait a minute, I just saw Barb and Nicole do this demo of KFS, and it's checking my values as I enter them. Why do I need my data validated? And it is true that the entries that come from KFS eDocs tend to be pretty clean. KFS isn't going to let you do something like make up an account number and put it in an accounting document. If that account number doesn't exist, the application is going to stop you and say, hey, wait a minute, we have a problem, you can't go on. So they'll never really get that far. But because we're getting these transactions from other places, from outside places, from maybe enterprise level systems, or from the collector, as I mentioned, it's possible that you will get data that somebody wants to post that's not good. Maybe they send a bad account number. Maybe they send a bad object code. Or maybe it's just a valid object code, but your object codes differ on different charts. Maybe that object code doesn't exist on the chart they're trying to post it to. So the scrubber's primary responsibility up front is to look at every transaction that's coming in and to check these kind of non-free-form fields. If the field corresponds to a table in your chart data, the scrubber looks at it and says, yep, that's valid chart, yep, that's a valid account, yep, that's a valid sub-account, object code, sub-object code, on down the line, and looks for errors. And if it finds errors, it snags them and sort of segregates them out, puts them in a file for you. And I'll talk in a little bit about what happens with that file and all the files that the accounting cycle generates. So the first hurdle is just, is the stuff coming in clean? Does it look like stuff I could post that would make sense in my general ledger? I think Bill had talked a little bit when he showed the account document about the continuation account. So when you expire or close a KFS account, one thing it requires you to do is say, well, here's the continuation account, the new account number. If I get transactions for this old account number that I'm trying to close out or that's no longer good anymore, here's the account number that you should use. And so the scrubber also checks for that. It says, is this account expired? If so, find the continuation account, and it'll sort of cycle through that until it finds a valid account. So it's pretty good at finding the right account. And there are parameters and things where you can actually specify in KFS. Maybe you don't always want this to happen. Maybe you want to allow certain external feeds to post to expired accounts. Or there's a parameter in KFS that says how many days after the expiration of a grant account do you want to allow them to continue to post. In the test drive, it's 90 days, which is kind of what we do at IU. And after that, start rolling to the continuation account. So there are some parameters and settings and things within the system that can affect this. But basically, it's the scrubber that's responsible for doing it. So it's checking the data that's coming in. Is it good data? Do I need to find continuation accounts for anything? Or trying to post to closed or expired accounts? The other important function of the scrubber is it generates offsets. And most KFS eDocs, in fact all KFS eDocs, except for a couple that are specifically built not to do this, will generate offsets for you. So if you do that distribution of income and expense document that Barb and Nicole were showing us, I put in my expense entries on the from and the to side, and the general ledger, actually the eDoc, will go ahead and generate offsetting transactions. It'll generate the proper offset to cash. Again, this is table driven, so there's an offset table where you can kind of define what object codes you want things to be offsetting in. But the application will do that for us. But will your payroll system do that for you? Maybe. And if so, great. We don't need to generate offsets for those either. But if you have other enterprise feeds or things coming in from the collector, those folks may not understand, may not be able to give you a file that includes totally balanced transactions with the appropriate offsets. So what the scrubber does is it looks at transactions and it sees, is this transaction balanced? And if so, it leaves it alone. If it's not, it will generate the appropriate offsets for that transaction. It'll also generate entries for the capitalization of assets and liabilities, for plant indebtedness, so there's code in there that will generate these entries, again, largely based on information that's set up in your chart. Cost share, KFS has a specific mechanism built in for dealing with cost share on grant accounts. So just to briefly, cost share is sort of your institution's project costs that the granting agency isn't paying for. So the federal government said they'd give me $50,000 to do this project, and I said I'd chip in 25. Well, how do I track the 25? So I can show that I really spent it for this project and didn't just like add a new swimming pool. So what KFS does is it tracks cost share through cost share sub-accounts, which you tie to the grant account. It's a specific kind of sub-account that you create, and it's connected in the chart to an account that's going to actually fund that cost share. So you say, well, this is for this grant, but I'm going to pay for it out of my departmental account over here. So you create that sub-account, tie it to the grant account, and you enter what's called the source account. That's the account that's really going to pay for this cost share. And then as you spend that cost share money on the grant, you just charge those expenses directly to the cost share sub-account. And what KFS does as part of the scrubber process is it goes out and it does kind of generate sort of a transfer of funds. It says, well, it hit the cost share sub-account, but it really needs to be paid for out of this departmental account. So it charges an expense to the departmental accounts, or transfers that another entry to offset the expense in the cost share sub-account. So then the cost share sub-account really just becomes a mechanism to track what you've cost shared. But it really has no running balance itself, because the expenses end up out on a departmental account. So the scrubber is also responsible for doing that. Along those same lines, you might have something like a purchase order, where we're going to buy a piece of equipment that we said we'd track as part of our cost share for a grant. When we create something like a purchase order, it creates an encumbrance entry saying, hey, we're going to spend this money, we haven't spent it yet, but you probably want to track it and know that I've got this $10,000 microscope on order now. For cost share, since we have this unique connection behind the scenes to another account, we want to make sure that that encumbrance shows up on the account that's ultimately going to end up paying for it, even though we would have written the purchase order directly on the cost share sub-account. So there's always this tether back to the account that's really going to pay for these cost share expenses, and the scrubber is kind of responsible for generating the entries that keep that together behind the scenes. So it's validating data, it's generating offsets when it needs to, generating capitalization and plant indebtedness entries, taking care of cost share entries if you're using the KFS mechanism of tracking cost share. It will also do most of your error handling. And this kind of refers to the file I was talking about earlier. Basically, the scrubber takes the errors that it finds from the validation processes, and drops them in a file, an error file that you can get to with the document I'll talk about in a little bit. And this is really the most common source for corrections directly into your GL using this, what we call the GLCP. It stands for the General Ledger Correction Process document, which I'll talk about in some detail in a minute. It's basically for handling these error files, passing them back in to the general ledger.